AMD shares are sinking in overtime. They're down about 7% right now. The chipmaker matching Wall Street's profit estimates and beating on the top line, but disappointing gaming revenues are weighing on the stock. Let's bring in Bernstein Research senior analyst Stacy Rasgon. Stacy, it's great to have you on. The stock is down 7% right now. I mean, they beat in data center. They came in everything but gaming, and I realized that the gaming segment collapsed in terms of the financial metrics. Is that really what's driving the losses here?
No, I don't think so. I don't think that's why the stock's down. I don't think anybody really cares about gaming. And we knew gaming was going to be bad. It's worse than we thought, but we knew it was going to be bad. No, I think the issue is the bulk of the revenue guide. Data center beat a little bit. The bulk of the beat was on client, on PCs. And the issue, I think, like the actual guide for Q4 was actually in line to even slightly below. So if that PC strength continues into Q4, it leaves less and less room for data center to beat. And like people are really hoping for upside to the AI guidance. And you're just given this guide, like there's not a lot of room for tons of upside relative to expectations that I think we're also climbing markedly into the print. So I think that's what's going on. I don't think it's really about the gaming number.
Okay. I mean, Lisa Su in the release does talk about the quote unquote insatiable demand for more compute and the significant growth opportunities they're seeing due to that. Is it just a matter of you need to give time here to see that trickle down to results?
Well, I don't know. I think that is the question. You know, a number of their markets have been weak. I mean, look, the data center like industry, the server chips, like the market has been weak. At least they're taking share, which has been helpful. Their embedded business, which is primarily the Xilinx FPGA business that they bought a couple years ago, that's been cyclically weak. It does look like it's recovering, although it's slow. The thing that people mostly care about, though, is that AI business that is within that data center segment. The prior guidance for the year is quote unquote more than $4.5 billion. I think street expectations are already 5+. So that is going to be one of the key things we're listening for. Is like where's that? Where do they see that number this year? And then more importantly, it's really going to shift to next year. Like what's the growth prospect for that AI business? That's why people are really owning the stock. And again, just given the Q4 guidance, I don't know what kind of an exit rate that is going to leave for that AI business to really grow into next year. So these are the things that people are going to be drilling into on the call. But just given where the expectations have been and everything else, this wasn't the time to guide light. And I mean, they clearly did. And just where the strength in the business is coming from, like PCs, it's not really parts of the business that people really want to see strong. They'd rather see that strength coming from other areas that are just not showing it relative to where those expectations were.
Okay. Earlier this month, Lisa Su joined us here on Overtime as she unveiled this latest data center AI chip and the next gen GPU series that's going to begin to roll out, at least the first iteration, in the second half of next year. So it raises the question. We know there's a huge moat around NVIDIA, but what happens when these chips start to come onto the market? And is that when you potentially buy into the stock as you see that traction?
I don't know, because again, you can sort of look at what they've shown for the performance of those parts. And again, you have to be a little careful with these sort of first party benchmarks, but they believe that they will compete well versus a subset of NVIDIA's parts. But the issue is those parts that they're competing against with NVIDIA are already here, right? Whereas we're waiting, I don't know, 6, 9, 12 months for the relevant AMD parts. By then, NVIDIA will have their next generation stuff. And if you sort of look on a timeline, the relative dates of introduction of the competing parts, NVIDIA's still got their parts in the market at least a year in advance in many cases. Couple that with the other areas where NVIDIA is strong around software and services and hardware and systems and ecosystem. These are things that AMD is trying their best to construct, but it's very difficult. So no, I don't really see the moat around NVIDIA's parts flagging. And look, it's very clear from these results. Again, I've said this before, I don't want to knock AMD in the sense that, like the AI business they have was zero a year ago. So, I mean, it's growing off of that, but I can clearly see where the dollars are really flowing into the space. It's not really AMD. It clearly is NVIDIA. That's where the dollars are going.
Okay.